A comprehensive code on resolution of financial firms will be introduced as a bill in Parliament in 2016-17. This code will provide a specialized resolution mechanism to deal with bankruptcy situations in banks, insurance companies and financial sector entities. The code, together with the Insolvency and Bankruptcy Code 2015, when enacted, will provide a comprehensive resolution mechanism for our economy. The RBI Act 1934 is being amended to provide a statutory basis for the monetary policy framework and a policy committee through the Finance Bill 2016. The committee-based approach will add a lot of value and transparency to the monetary policy decisions. A financial data management center under the aegis of Financial Stability Development Council will be set up to facilitate integrated data aggression and analysis in the financial sector. To improve greater retail participation in government securities, RBI will facilitate their participation in the primary and secondary markets through stock exchanges and access to NDS-OM trading platforms. New derivative products will be developed by SEBI in the commodity derivatives market. To facilitate deepening of the corporate bond market, a number of measures will be undertaken, details of which are given in Annexure 2 to the budget speech. An enactment of the Insolvency and Bankruptcy Code will provide a major boost to the development of the corporate bond market. To tackle the problem of stress assets in the banking sector, asset reconstruction companies have a very important role. I therefore propose to make necessary amendments in the SARFAESI Act to enable the sponsorer of an ARC to hold up 100% stake in the ARC and permit non-institutional investors to invest in the securitization receipts. In the recent past, there have been instances of people in various parts of the country being defrauded by illicit deposit-taking schemes. The worst victims of these schemes are poor and the financially illiterate. The operation of such schemes are often spread across many states. I therefore propose to bring a comprehensive central legislation in 2016-17 to deal with the menace of such schemes. I SEBI Act 1992 in the coming year to provide for more number of benches of the Security Appellate Tribunal. As honorable members are well aware, the strength of the financial sector is dependent on a strong and well-functioning banking system. We have already a comprehensive plan for revamping the public sector banks, Indradhanush, which is under implementation. We are now confronted with a problem of stress assets in public sector banks, which is a legacy of the past. Several steps have already been taken in this regard. We are not interfering in the lending and personal matters of the bank. Structural issues have been addressed in various sectors like power, coal, highways, sugar and steel. The banks are putting in special effort to effect recoveries and focus on reviving stalled projects. To support the banks in this effort, as well as to support credit growth, I have proposed an allocation of rupees 25,000 crores in the budget estimate of 16-17 towards recapitalization of the public sector banks. If additional capital is required by these banks, we will find resources for doing so. We stand solidly behind these banks. Our public sector banks will be strong and competitive. The Banking Board Bureau will be operationalized during 2016-17 and a road for consolidation of public sector banks will be spelled out. The process of transformation of the IDBI has already started. Government will take it forward and also consider the option of reducing its stake below 50%. For speedier resolution of stress assets, the Debt Recovery Tribunal will be strengthened with focus on empowering the existing infrastructure, including computerized processing of court cases to support reduction in the number of hearings and faster disposal of cases. The Pradhan Mantri Mudra Yojana was launched for the benefit of the bottom pyramid of entrepreneurs. Banks and NBFCs, MFIs have reported the amount sanctioned under the PMMY has reached about rupees 1 lakh crore to cover 2.5 crores borrowers by early February this year. For the coming year, Madam, I propose to increase the target next year to rupees 1,80,000 crores. To provide better access to the financial system services, especially in rural areas, we will undertake a massive nationwide rollout of ATMs, micro ATMs in post offices over the next 3 years. Public shareholding in government-oriented companies, it means to ensure higher levels of transparency and accountability. To promote this objective, the general insurance companies owned by the government will be listed in stock exchanges. Government and the ease of doing business. Our government is giving an unparalleled emphasis to the good governance with special focus on process reforms. IT-enabled government processes. The whole idea is to remove irritants from public in their interface with government agencies. A task force has been constituted for rationalizing the human resource in various ministries. A comprehensive review and rationalization of autonomous bodies is also underway. A critical component of minimum government and maximum governance is to ensure targeted disbursement of government subsidies and financial assistance to the actual beneficiaries. Public money should reach the poor and the deserving without any leakage. 3 specific initiatives are proposed to achieve this objective. First, we will introduce the targeted delivery of financial and other subsidy benefit services by using the Aadhaar framework. The bill will be introduced in the current budget session of Parliament. The Aadhaar number or authentication shall, however, not confer any rights of citizenship or domicile. A social security platform will be developed for using Aadhaar to accurately target beneficiaries. This will be a transformative piece of legislation which will benefit the poor and the vulnerable. Secondly, we have already introduced a direct benefit transfer in LPG. Based on this successful experience, we propose to introduce a DBT on a pilot basis for fertilizer in a few districts of the country with a view to improving the quality of service delivery to farmers. Third, of a total of 5.35 lakh fair price shops in the country, automation facilities will be provided to 3 lakh fair price shops by March 2017. We have to bring transparency and efficiency in government procurement of goods and services. The Director General of Supplies and Disposal will establish a technology-driven platform to facilitate procurement of goods and services in various ministries and agencies by the government. To remove the difficulties and impediments to ease the doing of business, we will introduce a bill to amend the Companies Act in the current budget session of Parliament. The bill would also improve enabling environment for startups. The registration of companies will also be done in 1 day. Monitoring of prices of essential commodities is a key element of good governance. A number of measures have been taken to deal with the problem of abrupt increase in prices of pulses. Government has approved the creation of a buffer stock of pulses through procurement at a minimum support price and a market price through price stabilization fund. The fund has been provided with a corpus of rupees 900 crores to support the market intervention. Madam Speaker, for good governance, we have to capitalize on country's unity in diversity. To strengthen the understanding of each other, it is proposed to create a closer engagement between states and districts in a structured manner. Ek Bharat Shresth Bharat program will be launched to link states and districts, an annual program that connects people through exchanges in areas of language, trade, culture, travel and tourism. We shall do this through mutual agreement with participating states and districts. In 2017, the country will celebrate the 70th anniversary of our independence. We will chalk out the milestones for nation's journey beyond the 70th year anniversary of independence. Dr. Toynbee, the historian, had observed that a chapter which had a Western beginning will have to have an Indian ending. My belief is that the year 2017 will unfold the great historian's dream. Our scheme of Ek Bharat Shresth Bharat is a part of this mission. Madam, let me now elaborate on the fiscal situation in the context of the budget of 2016-17. While preparing this budget, I have received conflicting suggestions about the FRBM roadmap. Different schools of thought have argued either in favor of fiscal consolidation and stability or for a less aggressive consolidation and for boosting growth. I have weighed the policy option and decided that prudence lies in adhering to fiscal targets. Consequently, the fiscal target in the revised estimate of 2015-16 and the budget estimate of 2016-17 have been retained at 3.9% and 3.5% of GDP respectively. While doing so, I have ensured that development agenda has not been compromised. The total expenditure in this budget for 2016-17 has been projected at rupees 19.78 lakh crores, consisting of rupees 5.50 lakh crore under plan and 14.28 lakh crores under non-plan. The increase in planned expenditure is in the order of 15.3% over the current year's BE. Plan allocation has been given special emphasis to sectors like agriculture, irrigation, social sector, including health, women and child development, welfare of scheduled caste and scheduled tribe, minorities, infrastructure, etc. Continuing with the policy of higher empowering states, the total resources being transferred to the states are to 99,681 crores, more than RE of 15-16, and rupees 2,46,024 crores, more than the actuals of 2014-15. Details of allocations in certain vital sector schemes and transfer to the states are given in Annexure 3 to the speech. This is the last year of the 12th plan. Successive committees have questioned the merit in having a plan and a non-plan classification of the government expenditure. A broad understanding over the years has been that planned expenditures are good and non-planned expenditures are bad. This results in a skewed allocation in the budget. We need to correct this and give greater focus to revenue and capital classification of government expenditure. We have therefore decided that the non-plan classification will be done away with from fiscal 2017-18. The Finance Ministry will closely work with the state finance departments and align central state budgets in this regard. To improve the quality of government expenditure, every new scheme sanctioned by the government will have a sunset date and an outcome review. A redeeming feature of this year's budget is that we have improved upon the revenue deficit target from 2.8% to 2.5% of GDP in the RE of 2015-16. The FRBM Act has been under implementation for more than a decade. Both central and state governments have made significant gains from the implementation of this act. There is now a school of thought which believes that instead of a fixed number as a fiscal target, it may be better to have a fiscal target range as the target, which would give necessary policy space to the government to deal with dynamic situations. There is also a suggestion that fiscal expansion or contraction should be aligned with credit contraction or expansion respectively in the economy. While remaining committed to fiscal prudence and consolidation, a time has come to review the working of the FRBM Act, especially in the context of uncertainty and volatility, which have become the new norm of the global economy. I therefore propose to set up and constitute a committee to review the implementation of the FRBM and give its recommendation on the way forward. As honourable members are aware, the 7th Pay Commission has submitted its report. Following the past practice, a committee has been constituted to examine the report and give its recommendations. In the meanwhile, I have made necessary interim provisions in the budget. We have rationalized and restructured more than 1,500 central planned schemes into about 300 central sector and 30 centrally sponsored schemes. This will avoid overlapping of expenditure. I reiterate that I remain committed to the financial requirements arising out of the economic packages that have been announced by our government, and also commitments emanating from the reorganization of the states. I have also allocated an initial sum of rupees 100 crores each for celebrating the birth anniversary of Pandit Deen Dayal Upadhyay and the 350th birth anniversary of Guru Gobind Singh Ji. Tax reforms. I shall now turn to tax reform, which is elaborated in Part B of my budget scheme. Madam Speaker, I shall now present my tax proposals. The government acknowledges the role of the taxpayer in the nation building. Each rupee of the tax contributes towards the government's effort to provide a better infrastructure, rural revival, and social well-being. Taxation is a major tool to the government for removing poverty and inequality from the society. The posterity will not forgive us if we do not use this opportunity in this perspective. The thrust of my tax proposals this year falls in 9 categories. 1. Relief to small taxpayer. 2. Measures to boost growth and employment generation. 3. Incentivizing domestic value additions to help make in India. 4. Measures for moving towards a pension society. 5. Measures for promoting affordable housing. 6. Additional resource mobilization for agriculture, rural economy, and clean environment. 7. Reducing litigation and providing certainty in taxation. 8. Simplification and rationalization of taxation. 9. Use of technology for creating accountability. Relief to small taxpayer. In order to lessen the burden on individuals with income not exceeding 5 lakhs, I propose the ceiling of tax rebate under Section 87A from 2,000 to rupees 5,000. There are more than 2 crore taxpayers in this category who will get a relief of rupees 3,000 in their tax liability. The people who do not have any house of their own and do not get any house rent allowance from their employer today get a reduction of rupees 24,000 per annum in their income to compensate them for the rent they pay. I propose to increase the limit of deduction in respect of rent paid under Section 80GG from rupees 24,000 per annum to rupees 60,000 per annum, which should provide relief to those who live in rented houses. The next, madam, is important. Presumptive taxation schemes under Section 44AD of the Income Tax Act is available for small and medium enterprises, that is non-corporate businesses, with a turnover or gross receipts not exceeding 1 crore rupees. At present, 33 lakh small business people avail of this scheme, which frees them from the burden of maintaining detailed books of account and getting audits done. I propose to increase the turnover limit under this scheme to rupees 2 crores, which will bring big relief to a category of assessees in the MSME category. That is to say, anyone with a turnover in business of 2 crores, there will be a presumptive income of 8%. I also propose to extend the presumptive income taxation scheme to all professionals with gross receipts up to 50 lakhs, with a presumption of profit being 50% of their gross receipts. Madam, this for small businesses and all professionals, this will bring tremendous ease in their taxation matters. Measures to boost growth and employment generation. I had in my last budget speech mooted a proposal to reduce the rate of corporate tax from 30 to 25% over a period accompanied by rationalization of removal of various tax exemptions and incentives. In any case, the effective rate of tax paid by the companies comes to an average of 24.67 because of various exemptions which they are availing of. A phasing out plan of these exemptions and tax incentives was placed in the public domain. we have received a large number of constructive suggestions. The final phasing out of exemptions is given in an annexure to the speech. The highlights are as follows. The accelerated depreciation provided under the Income Tax Act will be limited to a maximum of 40% with effect from 1st April 2017. The benefit of deductions of research would be limited to 150% from 1st April 17 and 100% from 1st April 2020. The benefit of Section 10AA to a new SEZ will be available to units which commence activity before 31/3/2020. The weighted deduction under 35 CCD for a skill development will continue up to 1/4/2020. The reduction in corporate tax has to be calibrated with additional revenue expected from the incentives being phased out. The benefits of phasing out of exemptions are available to the government only gradually. In the first phase, therefore, I propose the following two changes in the corporate income tax rates. A, the new manufacturing companies which are incorporated on or after 1st March 2016 as proposed to be given an option of being taxed at 25% per surcharge plus cess, provided they do not claim any profit-linked investment-linked deduction and do not avail of any investment allowance and accelerated depreciation. Madam, new manufacturing companies will also bring jobs. I also propose to lower the corporate income tax rate for the next financial year of relatively small enterprises companies with turnovers not exceeding 5 crores in the financial year ending March 2015 to 29% per surcharge plus cess. Startups generate employment, bringing innovation, and are expected to be key partners in Make in India program. I propose to assist their propagation through 100% deduction of profits for 3 out of the 5 years for startups set up during April 2016 to March 2019. MAT will apply in such cases. Capital gains will not be taxed if invested in regulated or notified fund of funds and by individuals in notified startups for which they hold majority shares. Research is a driver of innovation, and innovation provides a thrust to economic growth. I propose a special patent regime with 10% tax on income from worldwide exploitation of patents developed and registered in India. In order to get more investment in the asset reconstruction companies, which plays a very important role in the resolution of bad debts, I propose to provide a complete pass-through of income tax to securitization trusts, including trust of ARCs. The income will be taxed in the hands of the investor instead of the trust. However, trusts will be able to deduct tax at source. The period for getting long-term capital gain regime in the case of unlisted companies is proposed to be reduced from 3 to 2 years. Non-banking financial companies will be eligible for deduction to the extent of 5% of their income in respect of provision for bad and doubtful debts. For determining the residency of foreign company on basis of place of effective management is proposed to be deferred by 1 year. I would like to reiterate our commitment to implement the general anti-avoidance rules from 1/4/2017. In order to meet our commitments to the BEPS initiative of the OECD and G20, the Finance Bill 2016 includes provisions for requirement of country-by-country reporting for companies with a consolidation revenue of more than euros 750 million. I propose to exempt service tax on services provided under the Deen Dayal Upadhyay Gramin Kaushalya Yojana and services provided by assessing bodies empaneled by the Ministry of Skill Development and Entrepreneurship. I propose to exempt service tax on general insurance service provided by under the Nirmaya Health Insurance Scheme, launched by the National Trust for Welfare of Persons with autism, cerebral palsy, mental retardation and multiple disability. To promote the use of refrigerated containers, I propose to reduce the basic custom duty by the excise duty to them from 5% to 6%. As a number of assistive devices, rehabilitation aids and other goods for differently abled persons attract nil basic custom duty. Accepting the suggestion that came from the Mr. Rahul Gandhi, I propose to exempt this exemption to the burial paper also. Customs and excise duty structures plays an important role in incentivizing domestic value addition towards Make in India campaign of our government. In line with that, I propose to make suitable changes in the customs and excise duty rates of certain inputs, raw materials, intermediaries, components and certain other goods, and simplifying procedures as to reduce cost and improve competitiveness of domestic industry in sectors like information technology, hardware, capital goods, defense production, textiles, mineral fuels, mineral oils, chemicals, petrochemicals, paper, paperboard and newsprint, maintenance, repair and overhauling of aircrafts and ship repair. Details of these changes are given in annexure to the budget speech. Measures for providing a pension society. Pension schemes offer financial protection to senior citizens. I believe that the tax treatment should be uniform for defined benefits and defined contribution pension schemes, pension plans. I propose to make withdrawal up to 40% of the corpus at the time of retirement tax exempt in the case of the National Pension Scheme. In case of superannuation funds and recognized provident funds, including EPF, and the same norm of 40% of the corpus to be tax-free will apply in respects of corpus created out of contribution made after 1/4/2017. Further, the annuity fund which goes to the legal heir after the death of the pensioner will not be taxable in all three cases. Also, we are proposing a monetary limit for contribution of the employer in recognized provident and superannuation fund at 1.5 lakh per annum for taking the tax benefit. I propose to exempt from service tax the annuity services provided by the National Pension System and the services provided by the EPFO to its employees. I also propose to reduce service tax on single premium annuity insurance policies from 3.5% to 1.4% of premium paid in certain cases. Measures to promote affordable housing. The Pradhan Mantri Awas Yojana embodies the assurance of the government to address the housing needs of all and more specifically the poor in a time-bound manner. Construction of housing creates considerable employment opportunities as well. In order to fuel activity in the housing sector, I propose to give 100% deduction for profits to an undertaking from a housing projects for flats up to 30 square meters in the 4 metro cities and 60 square meters in other cities approved during June 2016 to March 2019 and is completed within 3 years of approval. Minimum alternative tax will, however, apply to these undertakings. For the first home buyers, I propose to give a deduction for an additional interest of rupees 50,000 per annum for loans up to 35 lakhs sanctioned during the next financial year, provided value of the house does not exceed 50 lakhs. Another proposal to stimulate housing activity is to facilitate investment in the real estate investment trusts. I propose that any distribution made out of the income of the SPV by the REITs or the InvITs having specified shareholding will not be subject to the dividend distribution tax. It is proposed to exempt service tax on construction of affordable housing up to 60 square meters under any scheme of central or state government, including the PP scheme. I also propose to extend excise duty exemptions presently available to concrete mix manufactured at sites for the use of constructions at such sites to ready mix concrete. Additional resource mobilization for agriculture, rural economy and for a clean environment. Dividend distribution tax uniformly applies to all investors irrespective of their income slabs. This is perceived to distort the fairness and the progressive nature of taxes. Persons with relatively higher income can bear a higher tax cost. I therefore propose that in addition to the DDT paid by the companies, tax at the rate of 10% of the gross amount of dividend will be payable by recipients, that is an individual, HUF and firm, receiving dividend in excess of 10 lakh rupees per annum. I also propose to raise the surcharge from 12% to 15% on person other than companies, firms, cooperative societies having an income of over rupees 1 crore. I also propose to collect at source at the rate of 1% on purchase of luxury cars exceeding a value of 10 lakhs and purchase of goods and services in cash exceeding rupees 2 lakhs. For compliant taxpayers with resources, this levy will not only advance collection of taxes when expenditure is incurred, but it provides data to the tax authorities to identify the persons who incur such expenditure but may be missing from the tax base. Farmers and notified class of persons will have an option of giving a form by which TCS will not be charged. Rate of security transactions tax in the case of options is proposed to be increased from 0.017 to 0.05%. In order to tap tax on income accruing to foreign e-commerce companies from India, it is proposed that a person making a payment to a non-resident trust who does not have a permanent establishment exceeding in aggregate 1% in the year as consideration on online advertisement will withhold tax at 6% gross amount paid as equalization levy. The levy will only apply to B2B transactions. I propose to impose a cess called the Krishi Kalyan cess, that is 0.5% on all taxable services, proceeds of which would be exclusively used for financing initiatives relating to the improvement of agriculture and welfare of farmer. The cess will come into force with effect from 1st of June 2016. Input tax credit on this cess will be available for payment of this cess. The pollution and the traffic situation in Indian cities is a matter of concern. I propose to levy an infrastructure cess of 1% on small petrol, LPG and CNG cars, 2.5% on diesel cars of certain capacity, and 4% on other high engine capacity vehicles and SUVs. Madam, the exemption rate of duty which existed on parts of environment friendly vehicles, which expires on 31st March this year, I am planning to continue that. I propose to impose an excise duty of 1% without input tax credit or 12.5% with input tax credit on articles of jewelry, excluding silver jewelry, other than studded with diamonds and some other precious metals, with a higher exemption and eligible limits of rupees 6 crores and 12 crores respectively. Necessary steps will be taken to enable the new taxpayers to comply with this levy without any difficulty. I propose to change the excise duty on branded ready-made garments and made-up garments of textiles with a retail price of above rupees 1,000 from nil to an input tax credit of 6%/12.5 with input credit to 2% without input tax credit or 12% with input tax credit. I propose to rename the clean energy cess levied on coal, lignite and peat as clean environment cess and simultaneously increase its rate from rupees 200 per ton to rupees 400 per ton. To discourage consumption of tobacco and tobacco products, I propose to increase excise duty on various tobacco products other than BDs by about 10 to 15%. I propose to amend the finance bill so as to declare assignment by the government of the right to use radio frequency spectrum in its subsequent transfer a service to make it clear that the assignment of the right to use the spectrum is service leviable to service tax and not sale of intangible goods. Reducing litigation and providing certainty in taxation. Madam, we are moving towards a lower tax regime with non-litigious approach Thus, while compliant taxpayers can expect a supportive interface with the department, tax evasion will be countered strongly. Capability of a tax department to detect tax evasion has improved because of enhanced access to information and availability of technology-driven analytical tools to proceed such information. I want to give an opportunity to the earlier non-compliant to move to the category of being compliant. I propose a limited period compliance window for domestic taxpayers to declare undisclosed income or income represented in any form of asset and clear up their past transgressions by paying tax at 30%, a surcharge of 7.5% and a penalty of 7.5%, which is a total of 45% of the undisclosed income. There will be no scrutiny or inquiry regarding the tax declared in these declarations under the Income Tax Act or the Wealth Tax Act, and declarations will have immunity from prosecution. Immunity from Benami Transaction Prohibition Act 1988 has also been proposed subject to certain conditions. The surcharge levied 7.5% of undisclosed income will be called Krishi Kalyan surcharge and will be used for agriculture and rural economy. We plan to open the window under the income tax disclosure scheme from 1st June to 30th September 2016 with an option to pay the amount due within 2 months of the declaration. Our government is fully committed to removing black money from the economy. Having given one opportunity for those who evaded income to declare it once, we would like to focus all our resources on bringing back people with black money to the books. Litigation is a scourge on the tax-friendly regime and creates an environment of distrust in addition to increasing the compliance cost of taxpayers and administrative cost to the government. There are about 3 lakh tax cases pending before the first appellate authority with disputed amount of rupees 5.5 lakh crores. In order to reduce this number, I propose a new dispute resolution scheme. A taxpayer who has an appeal pending as of today before the Commissioner Appeals can settle his case by paying disputed tax and interest up to the date of assessment. No penalty in respect of income tax cases with disputed tax up to rupees 10 lakhs will be levied. Cases where disputed tax exceeds 10 lakhs will be subjected only to 25% of the minimum of the imposable penalty for both direct and indirect taxes. Any pending appeal against a penalty order can be settled by paying 25% of the minimum amount of imposable penalty. Certain categories of persons, including those who are charged with criminal offences under the specified acts, are proposed to be barred from availing of this scheme. I had in my budget scheme of July 2014 assured that this government would not retrospectively create a fresh taxation liability. I had hoped then that cases pending in various courts and other legal fora relating to certain retrospective amendments undertaken to the Income Tax Act 1961 through the Finance Act of 2012 would soon reach their logical conclusion. I would like to reiterate that we are committed to provide a stable and predictable taxation regime. We will not resort to such an amendment in future. I had also announced a high-level committee which would oversee any fresh case where the assessing officer proposes to assess or reassess the income in respect of indirect transfers by applying the retrospective amendment. In order to allay any fears of tax adventurism, the committee will now be chaired by the Revenue Secretary and consist of the chairman, CBDT, and an expert from outside. The committee will effectively oversee the implementation of this assurance. In order to give an opportunity for past cases which are ongoing under the retrospective amendment, I propose a one-time scheme for dispute resolution for them, in which, subject to their agreeing to withdraw their pending appeals lying in any court or tribunal or any proceeding for arbitration, mediation, etc. under BIPA, they can settle the case by paying the tax areas in which case the liability of interest and penalty shall be waived. levy of heavy penalty for concealment of income has over the years resulted in a large number of disputes, despite a number of decisions of the Apex Court on interpretation of statutory provisions and principles guiding the imposition of the penalty. At present, the income tax officer has a discretion to levy penalty at rupees 100% to 300% of the tax sought to be evaded. I propose to modify the entire scheme of penalty by providing a different categories of misdemeanors with graded penalty and therefore substantially reducing the discretionary power of the tax officer. The penalty rates will now be 50% of the tax in the case of underreporting of income and 200% in tax where there is misreporting of fact. Remission of penalty is also proposed in certain circumstances where taxes are paid and appeal is not filed. Another issue which has led to considerable number of disputes is the quantification of disallowance of expenditure relating to exempt income under Section 14A of the Income Tax Act. I propose to rationalize the formula in Rule 8D governing such quantification. The said rule is being amended to provide that disallowance will be limited to 1% of the monthly average value of investment yielding exempt income, but not exceeding the actual expenditure claimed. As another taxpayer-friendly measure, I propose to provide a limit of 1 year for disposing of petitions for taxpayers seeking waiver of interest and penalty. The Income Tax Department is also issuing instructions for making it mandatory for assessing officers to grant stay of demand once the assessee pays 15% of the disputed demand, while the appeal is pending before the Commissioner of Income Tax Appeals. In case of deviations, the assessing officer has to take orders from his superiors. The tax officer also has an option to the superior officer in case he does not agree with conditions of stay order passed by the subordinate officer. In order to remove the backlog of cases, we are creating 11 new benches of the Customs, Excise and Service Tax Appeal Tribunal (CSTAT). The monetary limit for deciding appeal by a single member bench is proposed to be enhanced from rupees 15 lakhs to rupees 50 lakhs. I also propose to amend the Senvet Credit Rules 2004 so as to improve the credit flow, reduce the compliance burden associated litigation, particularly those relating to apportionment of credit between exempted and non-exempted final products and services. The amendments in these rules will also enable manufacturers with multiple manufacturing units to maintain a common warehousing for inputs and distribution of inputs with credits to the individual manufacturing units. Simplification and rationalization of taxation. The government has already accepted many recommendations of the Tax Administration Reform Committee, and I propose to accept a large number of recommendations of the Justice Ishwar Committee in this budget. To reduce multiplicity of taxes associated cascading and to reduce costs of collection, I propose to abolish 13 different cesses levied by various ministries in which the revenue collection is less than rupees 50 crores a year. To improve a cash flow position of the small taxpayer who get their funds blocked due to current TDS provisions, I propose to rationalize TDS provisions for income tax. The details are given in an annexure to this speech. Non-residents without PAN are currently subject to a higher rate of TDS. It is proposed to amend the relevant provisions to provide that on furnishing an alternate document, the higher rate will not apply. The facility for revision of returns hereto will be available to a service tax assessee only is being extended to a central excise assessee also. I propose to provide for an additional option to the banking companies and financial institutions, including non-banking financial companies, for reversal of the input credits with respect to non-taxable services provided by them by way of extending deposits and loans and advances. Our government has taken a number of steps to reduce the cargo release time and the transaction cost of exempt trade. I propose to amend the Customs Act to provide for deferred payment of customs duty for importers and exporters within the proven track record. In 2014-15 budget, I had announced the intent to implement Indian Customs single window project. We have made significant progress in this, and it would be implemented at all major ports and airports starting from the beginning of the next financial year. The custom baggage rules for international passengers are being simplified so as to increase the free baggage allowance. The filing of baggage declaration will be required only for those passengers who carry dutiable goods. Use of technology and creating accountability. Technology is a boom for mankind. We plan to use technology in the taxation department in a big way to make life simpler for law-abiding citizens and also for data mining to track tax evaders. A pilot was run in 2015-16 for e-assessments to obviate the requirements of taxpayers to visit the income tax office. I propose to expand the scope of e-assessments to all assessees in 7 megacities in the coming years. The case selected for scrutiny will be scrutinized in an e-environment where, unless the assessee himself wants to be heard or for special reasons to be recorded, the assessing officer wants to hear the party, there will be no face-to-face contact of the IT department and the assessing. Income Tax Department will fully expand the pilot initiative of e-Sahyog with a view to reduce compliance costs, especially for small taxpayers. The object of e-Sahyog project will be to provide online mechanism to resolve mismatches in income tax returns without requiring taxpayers to attend the income tax office. I propose that in matters pertaining to income tax, government will pay an interest at the rate of 9% as against a normal 6% in case there is a delay in giving effect to an appellate order beyond 90 days. The officers who delay it will be accountable for the loss to the government. I also propose to change the procedure to provide for a shift from physical controls to record-based control for customs bonded warehouses supported by sophisticated IT systems. Madam Speaker, my direct tax proposals would result in a revenue loss of rupees 1,060 crores and my indirect tax proposals will yield rupees 20,670. Thus, the net impact of all tax proposals would be a revenue gain of rupees 19,610 crores. Madam Speaker, this budget is being presented amidst a global and domestic headwinds. There are several challenges. We see them as opportunities. I have outlined the agenda of our government to transform India for the benefit of the farmers, the poor and the vulnerable. Madam Speaker, it is said that champions are made out of something they have deep inside them, a desire, a dream, a vision. We have a desire to provide socio-economic security to every Indian, especially the farmer, the poor and the vulnerable. We have a dream to see a more prosperous India and a vision to transform India. With these words, Madam, I commend the budget to this House for acceptance. Madam Speaker, I rise to move leave to introduce the Finance Bill 2016.
Statement. Item number 2. Lay on the table statement for microeconomic.
Madam, I rise to lay on the table the following statement under Section 3 of the Fiscal Responsibility and Budget Management Act 2003, Microeconomic Framework Statement, Medium-Term Fiscal Policy Statement, and Fiscal Policy Strategy Statement.
Now move the finance bill. Mr. Minister, now move the finance bill. Move to leave the introduce to finance.
Madam, I rise to move for leave to introduce the Finance Bill 2016.
Yes. The question is that leave is granted to introduce the Finance Bill 2016. Those in favor may say aye, those against may say no. I think the ayes have it, the ayes have it, the leave is granted. The Minister may now introduce.
Madam, I introduce the bill.
Thank you. The House stands adjourned to meet again tomorrow, 1st March 2016 at 11 a.m.